with central bank governors on monetary policy. This is an open to the public event with simultaneous interpretation available in English and Spanish. Please use the word icon at the bottom of the Zoom menu and choose the language of your preference. Bienvenidos a la conversación con gobernadores de bancos centrales y ministerios de finanzas en política monetaria. Esto es un evento abierto al público y cuenta con interpretación simultánea en inglés y español. En el icono de mundo, en la parte inferior del menú de Zoom, podrá seleccionar el idioma de su preferencia. We are pleased to have Ms. Marta Ruiz-Arranz from the IDB as the moderator. Ms. Ruiz-Arranz, the microphone is yours.
Muchas gracias. Bienvenido.
Thank you very much, and welcome to this open session of the 57th meeting of the Network of Central Banks and Finance Ministries. My name is Marta Ruiz-Arranz, and I am the Economic Advisor at the Department of Central America, Mexico, Haiti Department, and it's my honor to moderate this session where we meet with presidents of central banks. And here we're going to be talking about the challenges in terms of monetary and financial policy. So I welcome our distinguished panelists. Welcome to Mr. Álvaro González Ricci, who is the president of Guatemala Central Bank. Thank you for being with us today. Also, Mr. Pablo García, vice president of the Central Bank of Chile. Welcome. Mr. Roger Edwin Rojas, who is the president of Bolivia's central bank. Welcome. And Mr. Leonardo Villar, who is the manager of Banco de la República in Colombia. Unfortunately, Mr. Kevin Greenwich from Barbados was not able to join us today. We're going to have a very interesting conversation, and I thank our panelists for having made time to be with us today. We're going to begin by asking our panelists to discuss the challenges of monetary and financial policy in their countries. You're going to have 5 minutes, and after sharing your thoughts, we will be having a question and answer. So with that, I recognize Director Mr. Gonzalo Ricci from Guatemala. Thank you. Thank you, Marta. Greetings to the panelists, to the audience. And I think that, yes, we all face similar challenges in our countries. What's happening in Guatemala is like what is happening in other countries, not only in the region, but in the world. What happened in Ukraine and Russia and different COVID experiences led to problems where central banks had to use their monetary policy, and each country has done something different. Now, in Guatemala, we have inflation targeting. Our target is 4%, plus minus 1%. And last year, we closed with the historical information around 9.4% of inflation. So that means that we were 4% above the 5%, which was the top of our range. The rate that we had was 2.45. We brought it down to 1.40%, and we flexibilized some of the rules so that banks could be more aggressive in terms of their lending and how they dealt with arrears so that that would not affect their balance sheets. And inflation, when it began to go up, Guatemala also raised its rate, not like what happened in the United States. Here, they acted late, and that meant that they had to increase rates aggressively. In Guatemala, we went up by 0.25 again, and currently we have 4.75. That is the rate that we have in Guatemala. And as the technical teams of the central bank advised, in the month of March, inflation is going down. It's now at 8% and we hope that by the end of the year, perhaps early next year, we will be back at inflation close to the target, which is, as I said, is 4% plus minus 1%. Now, we have done this gradually and also supported by consensus by the Monetary Board in Guatemala, where we have representatives of the bank and the private sector. Also, we have representatives from the state university too, representative of Congress, and all decisions are made by unanimity. In other words, we have had lengthy discussions, and although the bank is autonomous, the pressures to increase the policy rate has to be shared. In the case of Guatemala, we do not want to affect economic growth rates unless it's absolutely necessary. During COVID, we had a low growth rate, but we had a recovery of 8% in 2021, where we grew 4.1 last year, and now we hope to grow around 3.5% plus minus 1%. We do not want to derail that growth. We have historic international reserves equivalent to 8 months of imports and rates that are stable over the last few years, and there the Banco de Guatemala does not intervene in the trend, just monitors volatility. So with the reserves we have, with the monetary stability, we have a solvent, liquid, sound system, very robust in Guatemala. And last year, the 3 risk raters, Standard and Poor's, Moody's and Fitch, rated us, and this year we were raised a notch. We were BB minus, now we have a stable outlook. We're still waiting for Moody's, and the importance of Moody's is that we are 1 notch away from investment grade. So if Guatemala, through the numbers it has and the good macroeconomic performance, we have worked with the private sector. We hired McKinsey. There's a program called Guatemala Never Stops, and the idea has been to involve all players in the country. Everyone agrees on what needs to be done, and all of that, plus the good numbers and the good ratings, will help us attract direct foreign investment, which is what the country needs to get ahead. Guatemala has major challenges. We have to improve on malnutrition, health, education, but for that we need resources. Our tax revenue has gone up thanks to the fact that we are working with the private sector. We have been able to raise tax collection by 45%, and that has taken us to our current position. Thank you. The case of Guatemala is interesting because of the resilience of the economy during COVID. And all of this is reflected in the improved credit ratings. So now I wanted to call on Pablo García, Vice President of the Central Bank of Chile. Unfortunately, the president of the bank was not able to be with us, but we're glad to have you here. So you have 5 minutes. Thank you, Marta. Thank all of you for being here. As Álvaro said, there are many challenges that are shared. The whole world has gone through well-correlated events affecting all of the cycles, some more, some less, and each country with its own idiosyncrasy. But we all see inflation as the major challenge. I would say that the inflation issue is a problem that affects us in our macro in Chile, and the whole idea is to get closer to target, which is 4%. We're 3 times higher at 12%. So in 2021, we began to increase rates. Late last year, we were at 11.25, and that's where we are holding. And we think that is the way to get inflation trends to get closer to our target. Now, where does this inflation come from? Why do we have inflation? As I said, in Chile, we had a lot of expansion of private consumption for different reasons. And to this, we have to add the problems associated to the war and also an opening up of the economy that increased consumption and personal expenditure. And all of that goes hand in hand with the constitutional discussions that have been intense and introduced greater volatility into our economy, and hence the inflationary problem that we're dealing with. Now, looking ahead in terms of what we think will lead to convergence, we have to understand that there are factors that lie ahead and others that lay behind us. Now, our economic activity focuses on consumption, and it's above what is a sustainable trend. Our capacity gap is 3% of GDP. It was higher in the sector in 2021, 2022, and our labor market has been quite resilient too. In this moderation cycle, there was a deficit in current account in 2022 that was significant. It reached 10% of the GDP. That's something we hadn't seen for a long time. And also, there was a drop compared to historic trends. So there is a lot of readjustment in the macroeconomics in Chile, and that is the mechanism where we're going to be able to bring inflation down to target. There are some factors that are positive and that help us. For example, fiscal support. There was significant consolidation last year. We went from a deficit versus GDP of 10% to a balanced situation in 2022. And that was important fiscally. And we also see that the level of debt has stabilized. Our currency is also appreciated in recent months. That helps lower inflationary pressures in the future. And also, pressures on value chains have been alleviated recently. So these phenomena that are more supply side and more cost related, in addition to macroeconomics that is moderating, makes us able to think that we are getting inflation down closer to convergence. Now, the question is always, when are you going to lower rates? That is the debate. And what we have said is that we can begin easing once we're convinced that the inflationary trend is consolidating and getting closer to the target. So we have to moderate consumption for that. And also the trends that lead to increasing inflation have to moderate. So once that is underway, we could think of doing monetary easing. Thank you. Thank you, President Garcia, for talking about the drivers of the inflationary process in the future and the prospects for interest rates in the future. Now, I call on President Rojas from Bolivia. Thank you, Marta, and warm greetings to all of those here in the room, also those that are connected virtually, and I wanted to thank the IDB for inviting me to take part in this panel. I would like to begin by pointing to some elements that I consider need to be mentioned. In terms of the external context that faces each of our economies, plus our domestic scenarios. Now, each economy has its own special characteristics, and I think that talking about these elements makes it possible to look at the trend, what the trend has been in the economy over recent years, and also it helps us look at what the future may hold. Now, in the past, the economies have had to deal with a difficult context, but because of that, we have generated some mixed results. What do I mean? In some cases, for example, in Bolivia, the export sector has performed relatively well. But in other cases, that would be, for example, the use of fuels energy sources has affected prices because of the international context, the war, and other elements that have been mentioned here. But domestically, and I think that that is where each economy is different, and that has an effect on our monetary policy, economic policy in general. That's what I think best characterizes the performance, in this case, of Bolivia's economy. So with the aggressive context, COVID, followed by the war, etc., there is an element that antecedes the situation in Bolivia's economy, something we have to think about. Before these events in Bolivia, there was a breakdown of the democratic process, and that has affected economic policy performance. And also, that has to do with the development of some instruments so as to be able to generate certain well-being for the population. So efforts are made to try to reactivate the economy. That began in 2021. We have had very good performance in terms of economic growth, with rates close to 6% in terms of our economic growth, with inflation relatively under control, and a fiscal sector that supported the recovery of the economy after having managed those elements politically. I'm talking about what was done by the de facto government and the effect that this had in terms of a negative shock to the economy. In 2022, we saw a certain pace of economic activity, but there are external elements that have a bearing on economic policy. That is what we had expected. We had done the projections, but I think that there are some very important results worth mentioning. First of all, inflation. Our inflation is relatively under control. Last year it was 3%. There has been an improvement in terms of fiscal performance, with a decrease in the fiscal deficit and also recovery of the economy. We have not reached the estimated levels, but we have ended the previous fiscal year around 4%. So this year, based on our monetary policy, we have certain macroeconomic targets that gave the signal that the economy has been overcoming these obstacles and showing favorable results in terms of growth above 4%, and an inflation close to 3%. And fiscally, we see that the deficit is absolutely controlled in the country. Thank you. Thank you very much, President Rojas. Thank you for sharing that with us. And thank you for reminding us of the origin of this inflationary shock and how Bolivia has been able to manage those challenges. With that, I call on President Diaz. Thank you. Thank you. I thank you, Marta. I thank you, IDB, for this invitation. Now, Colombia, like other countries, has dealt with shocks in recent years by taking strong action. The recovery in Colombia after the COVID crisis in 2020 was quick. The growth of the economy in 2021 was 11%, and there we recovered our activity levels in comparison to pre-pandemic. But in 2022, Colombia continued to grow strongly, and last year it had one of the highest growth rate, 2%. It went up 7.5%. And this, of course, seems to be a very positive story, very flattering. But there is a counterpart to this story, and it's highly dangerous. What happened was that the accelerated growth, especially last year, was accompanied by a very strong excess of demand in the economy, an excessive demand that was manifested in different ways. There was an important external deficit, 6.4% of GDP in terms of current account, balance of payments, but especially this was fertile ground for pressures that came from the outside, causing inflation, and there our target is 3%. Inflation went up much more than what we had seen in 2021. And at the end of last year, it was close to 11%. And right now, it's even higher, closer to 13.3%. Now, in that context, macroeconomic policy has reacted strongly. The monetary policy especially has reacted with an increase in interest rates that during the pandemic went down to 1.7%. That was a historical low. And now, for a year and a half, since September of 2021, those rates have been going up to 11.25 percentage points. So now we're at 13%. That is the highest increase in rates that we have had since we have had inflation targeting, and perhaps it is one of the highest increases in the history of Colombia. So that has gone hand in hand with stricter policies. In 2020, just like other countries, we had a deficit that was above 8% of GDP, and that was quite common in 2020. In 2021, we maintained a deficit at the same level. Now, then the deficit began to go down, but it was still a deficit of 5.5% of GDP, despite the strong performance of the economy. And the expectation is that this year it will go down to 3.8%, which means that we would, leaving out interest, we would have a surplus, a primary surplus in 2023, which is significant. And how has this been reflected in the economy? It seems, following the last quarter of last year, demand is up. There is an adjustment process as reflected in credit that had been going up for consumption, 23% in September of last year. Now it's growing at less than 13%, so that's a major decrease. And the growth of GDP, according to most indicators, has slowed down significantly. There is an important deceleration. Now, what is the problem? We have not begun to see a reduction in inflation. In the last couple of months, things have leveled off, the changes have been marginal, and the expectation is that soon we will see a major deceleration in the next few months. That is something that we see in terms of the producer price index. For consumer indexes. We see some fluctuation, and we continue to see increases in core inflation that is associated to a great extent with indexation. That is strong in Colombia, and there is a lag in terms of the impact on demand. Now, here, what we think is that inflation will come down significantly as of the next few months, and especially in the second half of this year and next year. And that way we will get back to levels close to target towards the end of next year, 2024. That would be 3%, which would mean a major reduction, but also a long period where we have been well above that 3% target. Thank you very much, President Villar. It is true, inflation has been persistent in Colombia, and it's not the only country. and perhaps during the conversation we can explore that fact. So I wanted to thank all of our panelists for these initial comments, and now I have a question for the panel about what we have seen in the international banking sector, where there has been a lot of turbulence with the collapse of some regional banks in the United States, also in Europe with Credit Suisse. And what would you say regarding the financial volatility? Has it increased in your countries? And what are the risks that you see ahead in terms of financial stability? Will this turmoil spread? Will it affect other banks? So please share with us your thoughts on those risks and how they are perceived in your countries. So once again, we will begin with you. Well, in the case of Guatemala, we don't see any risk. We're not exposed to those banks. And what we see is, and we see this on the news, that most of the crisis, Silicon Valley, all of the other banks, we know that not necessarily was their problem caused by the factors that we initially thought might be to blame. We even see that there are lawsuits now regarding what may have happened. And it seems that the drop in the price of U.S. Treasury bonds, since the rates have been going up, they're suffering in terms of their price because people begin to withdraw, and that produces a snowball effect. Now, as I said, in Guatemala, we have no exposure, no risk right now. So now, were this to affect the system, we would have to think along different lines. For example, we could think about lines of credit from foreign banks to local banks, but we don't see that. And we see that here in the United States, they're saying now that they're going to be dealing not only with what they have to look at according to law, but they will be doing further analysis. We see that Credit Suisse is taking another track. So in the case of Guatemala, we don't see any short-term latent risks, and the exposure of Guatemala to these problem actors really does not affect us. Very interesting thought. Now, in terms of what we have seen so far, and I say so far, is that this is a situation where the greater tightening of financial conditions in Europe and the United States, along with the banking turmoil, is going to rein in the world's economy. Our own projections, we have scenarios that are more pessimistic in that connection, with growth of the advanced economies being more moderate. However, I think it's also important to point out that we're not envisioning a crisis like what existed in 2008, where the problem with the subprime began long before, nor did it generate a major crisis. There had to be several things that happened before we saw the crisis in September, October 2008. Now, what we're seeing now, to think that that would lead to that, I would say that a lot of information and a lot of additional events would be lacking. It is true that this may affect the growth of advanced economies, and what we have to look at now is the magnitude of this phenomenon.
Lo que mencionó Álvaro, exposición directa.
For Chile, what is a priority is that in order to deal a very complex scenario, you need to have an inflation track that takes you towards your target, and you need to have a counter-cyclical monetary policy. If we're off target as far as inflation goes, it won't be possible to address an external shock. So we need to stay in a convergence track, focus on our objectives, and I think that's important to deal with any future shocks. Given the characteristics of the Bolivian economy, the impact has been fairly limited. The financial system's assets abroad are quite limited vis-a-vis the total assets in our system. The same is true for liabilities. It's not even 1%, just to give you a sense. So for the time being, we have not felt a direct impact from these activities, but we do know that there are risks because we understand that the global economy may have a negative impact which could slow down the pace our economy has experienced over the past 2 years, especially as relates to the growth of exports, especially those that are non-traditional exports, which is how we call them in Bolivia. And that could turn out to be a problem because in recent years our trade balance has been positive. So this could bring a constraint, a barrier that we'll have to overcome, but we'll see how that turns out. The other problem we also foresee, especially for an economy like that of Bolivia, has to do with financing. The flow of resources we need to support our investment dynamics are likely to go up. And as they go up, we expect to see an impact on the expected growth rate for this term. But those are elements that are in the background that we need to start to think about, and we are doing everything we need to do in order to be equipped to handle these issues when they arise. So Villar, I would like to mention what is a huge paradox, and it's not limited to Colombia. I think it's fairly generalized in the region. I think we're going to tighten our monetary policy much more than advanced countries have. We currently have oversight and regulations for our financial systems that are solid. So this is not a concern. In principle, the financial systems are responding correctly to circumstances where interest rates did increase drastically and in a way that is unprecedented. So that is a good thing. Now, clearly, the uncertainty in the financial sector, which we have seen, especially in the US, may have implications, but the channels which could bring its impact to our countries are mostly macroeconomic. And that, and this is also a paradox, could limit the increase of interest rates in our case, thereby buffering the impact of the rise in international interest rates, which is something that we are already experiencing. So it is not a matter of concern. So this is a paradox. I think it may be something which may end up, or for which we may have some protection because of the circumstances in place when the US financial crisis hit. And thank you for referring to that, for the resilience, mentioning how resilient the financial systems in the region are. This may be due to the fact that you've had so many crises in the past, and also that there's been prudential macro and micro management by countries. So hopefully all of that will work out the way you have forecasted. I'd like to maybe look at issues that are country specific, starting with you, Mr. González. As you said, you, in the case of Guatemala, have also seen a resilient economy, a strong external system, and you've also mentioned that a future risk could be of a political nature given the upcoming general elections. I'd like to ask you how you envisage that risk and what that could mean for economic stability in Guatemala. Thank you. Maybe my problem is that I'm overly optimistic. I was with the central bank and now with the Ministry of Finance, so maybe we work together well. We're balance each other. I don't see any problems. Guatemala has not seen much happen when we've had elections. Even in 2015, when both the president and vice president went to jail, nothing much happened. So I don't expect much to happen this time around either. I foresee a good year, an unprecedentedly large budget with a declining debt to GDP rate, so a larger budget, a lower GDP debt to GDP ratio. So all of that points to good things. I think we're going to see more jobs and we're going to see positive fallout. Remittances, and it's not that we want our Guatemalan brothers and sisters to leave and come to the U.S. looking for better opportunities, but when the incentive to come, driven by higher salaries, is such, it's not a matter of trying to do more. I think it's just that the salary incentives are just too significant. And so the remittances coming back are driven up, and that helps us with our credit rating. We have seen gradual increases in all sectors when it comes to the adjustments we have been making. We have seen that inflation is on the way down, and according to surveys of experts, they coincide that they agree we'll be reaching our inflation target in 12 to 24 months. So we are still anchored vis-a-vis the target we've had since 2013. Also, oil prices are stabilizing. A few months ago, 72% of inflation was imported primarily from the U.S. We're coming to close to 50, and I think that too will stabilize. So once again, Guatemala's problem is not going to be at the macro level. It's going to be of a different nature, as I said before, and it's not a matter for the central bank. But as a member of the executive and also as a former member of Congress, what I would say is that it's important for us to make sure that our population benefits from these additional resources in a manner that is transparent and that is efficient. Thank you, President González. President García, as you mentioned in your opening remarks, inflation in Chile is making the situation complicated. It's driven by external and domestic factors. And there's something you mentioned, which is price indexation. I would ask you to please elaborate on the role that has played in Chile's case. Yes, indeed, we have had indexation like many other countries of the region. But there's two things I would say about that. When you look at inflation, you need to separate the spread of inflation to the phenomena that spark inflation. So the spread comes from the first world, mechanisms that because of a shock or any other reason generates a dynamic that can last over time. The second is also important, and it may have to do with exchange rate. Indexation and its results are endogenous to the way an economy operates. It's not a phenomenon where you can say is part of what comes from outside. It's endogenous to monetary policy, to commitment to inflation targets. What we have seen is that since we've had a standing 3% target, we have seen that indexation has been part of our pricing arrangement. There's some specific contracts, tariffs, services that are highly indexed. But that component has not increased over time. Rather, I would say that it has been mitigated. So what does this mean for inflation? Well, inflation is persistent when you have a situation like this, so you have to fight it using monetary policy. So you can go back to your target. But that objective is what prevents indexation to play a wider role when it comes to prices. We have to act carefully because we don't want it to become a persistent problem. There is a table which separates persistence, which is intrinsic, and persistence, which is extrinsic when it comes to inflation. One has to do with the magnitude of the shocks that have an impact on it, and the other with its own dynamics. Until now, indexation, I would say, has not played a greater role than it has in the past. President Rojas, we, as you said, have seen a period of high commodity prices, oil and food. There's also been a rise in the cost of financing, and many economies have had problems in keeping a robust external position and maintaining their international reserves. Could you tell us how Bolivia has handled this? What are you doing via your monetary policy to address these global phenomena which have been so negative? Well, given the singularities of the Bolivian economy, I would say that, well, one of its special features is the role played by the public sector. It has a strong presence, not only when it comes to investment for infrastructure and development, but it's also strong when it comes to the presence it has in economic activity. So this means that we've been able to increase the supply of goods and services, especially for agricultural products, and this means that they have not had an impact on inflation. So that's something I wanted to flag. The public sector's involvement in investment and productive activities, in a sense, has made it possible to guarantee the supply of goods and services. I think that is something worth noting. The other detail is the coordination of economic policies in Bolivia. The central bank law and our constitution both refer to coordination between the monetary and exchange rate side and the fiscal side. The coordination process determines target variables on the macroeconomic front, and these materialize by building a fiscal and financial program, and that is the macroeconomic policy instrument, which makes it possible to deal with external shocks. At some point, we need to be more expansive in our monetary policy. Other times, we need to bring things back to normal levels, depending on what happens with investment and also with the demand in the country. And this is how we stabilize and how we strengthen our international position. What we have done is to have a subsidy policy. which has contributed to our fiscal financial program. That has provided stability. It has anchored inflation expectations. It's also made it possible for the private sector, given that the economy is stable, is able to respond in a positive manner. I said this earlier, over the past 2 years, the productive exporting sector has had commercial trade balance surpluses. So this means that having access to foreign exchange provides the economy with the resources it needs. I would add that our external debt position is among the lowest in the region, and that increases access to resources by the public sector. Flows have also made it possible for the economy's external sector to support the recovery process, and that also has been possible due to the price stability I mentioned. President, you mentioned that the growth rate has become more moderate, but what I would like to ask you is if you see a peak to the inflationary process. Some analysts have mentioned this. Some have said that in Colombia you have already seen a peak, and I would ask President García to explain what accounts for that persistence, and also what role is the exchange rate playing in the Colombian economy. First, it's hard to say whether we're at the peak or not. I think we need to wait for next month's figures, but I'm fairly convinced that the outlook for the coming months is going to be lower inflation, so that would mean that we're close to the peak, if not at the peak. What accounts for the strong persistence of inflation in Colombia? I would identify 3 elements. One is food prices. Prices have increased drastically, more than 50% over the last 2 years. There's been shocks, partly due to the international situation, also due to the domestic and climate situation, which have made things worse. And all of that is starting to level off. The increase in food prices, which was at 28%, has now gone to 21% for March. That is still high, and it means that relative prices of food are still on the rise, but overall there's been a decrease. The third critical element for Colombia is very strong indexation, and that has a special element related to salaries. Salaries are adjusted politically based on past inflation. The minimum salary, which is important in Colombia, is binding. And for 2022 and 2023, it's been set at levels that are unprecedented, much higher than observed inflation. In both cases, this has generated, or both years, this generated very strong pressures, and that has complicated the inflation situation when it comes to core inflation. And the third thing is the exchange rate. If we look at Colombia's exchange rate over the past 2 years, the exchange rate for the Colombian peso has depreciated much more than that of other currencies. Much countries have seen an appreciation of their currencies over the past 2 years, whereas Colombia has seen its rates lose value compared to previous years. But we're seeing that start to level off. It's being corrected, And over the past 3 or 5 months, depending on what you're looking at, what we see is an increase in value, especially more recently. And depending on the time, it could be 6 or 8%. And that, I think, is going to help improve our future inflation outlook. Thank you very much. So now I have a question for all panelists, and it's about the challenge posed by climate change in the region. I'm thinking of Chile and the severe drought. How should we approach monetary policy given those challenges? And President Villar just mentioned how this affected food prices and consequently inflation. How are you addressing climate change in your monetary policy? Clearly, climate change is something which has affected Guatemala, El Salvador, Honduras, Nicaragua. All of us have been affected by everything that comes from the other side of the Atlantic. There are some countries that pollute and countries that clean up. Guatemala is one of the countries that cleans up, and our major challenge, something we haven't been able to do, is to access funds generated by climate change, green funds, for example, which this could also mean working with our bond issuances. Now we are issuing green bonds, and those bonds have a preferential rate, and that is working well. But when it comes to monetary policy and the way we are issuing bonds, I would say that it's important to have access to special funds. We have met with the IDB and with the World Bank to see what we can do. I mean, we know what we need to do. They've given us a pathway to access those non-reimbursable or concessional funds. Guatemala has sold off $50 million in carbon bonds with the World Bank, so they've provided us with those 10 million of those 50. But it is a major challenge because these are not things that stem from our country. They're not coming from our country. We've seen Amanda, Christopher, Eta, and Iota. Those storms have all hit us hard, and now we need to work with parametric insurances. We've already had some tests, the CRIP with the World Bank. We've used that several times, and we need to look at insurance mechanisms, thinking of agriculture and other possibilities. But I think the main challenge ahead for us when it comes to climate change, it's something that is hard to control. We need to have access to funds and have access to insurance that can protect our farmers. We are an agricultural country, and we need to also think of the state's strategic assets. We worked with emissions 2 years ago. We issued a bond, a Euro bond, which had very good results. We also have issued bonds with better interest rates, and we'll continue to work with that. Thank you. It's very interesting to see how climate change affects us all, but in different ways. Chile has a geographical position and a position vis-a-vis the rest of the world which is unique. You referenced our drought, but it's also become a condition that is part of our climate, that we don't have tropical hurricanes, but we are seeing our country become more arid, and the desertification process is increasing. We've seen how this has displaced productive activity. There's been a shift to the south when it comes to agriculture, livestock, wine production. So there's been a certain migration of these activities to different parts of the country. So it's a good thing that our country runs north to south rather than east to west. That is what makes this possible. But as far as macroeconomic policy is concerned, it's something we need to assess carefully, considering our growth prospects. It's not something we see very clearly looking at macro policy. But there's something else which has to do with global strategies, especially electromobility. That is an area in which we have been blessed with natural resources which are key to this strategy. We have lithium, copper, wind, sun. So we have a whole array of natural resources which can become a comparative advantage in the future, and that will also potentially affect our growth and our economy overall. And in a way that is different from what we see today. So these are dimensions that must be taken into account, and these are topics which the central bank considers. We produce statistics. We also are responsible for stability, and that is important for climate change. And also our growth outlook has an impact on our central bank. Our annual research conference this year is going to be on climate change. So I invite you to participate and to connect so that you can participate. Thank you. President Rojas, thank you very much. Bolivia has been grappling with climate change for years now. We have set up insurance for the agricultural sector that makes it possible to mitigate some of the adverse effects of climate change. And it's been working quite well. These instruments have worked quite well, but at the same time, we have been working on other elements that can equip us to deal with this reality. It's a problem that affects all countries, and we all need to find ways to address it as best we can. What we've done at the domestic level is to provide incentives related to emissions, for example, special interest rates that will enable us to mobilize domestic resources for private investment, for example. So trying to lower the cost of financing, if you will. And as a central bank, what we have done is to use our unconventional monetary policy, as we call it, to generate resources, funds, that will make it possible to substitute fossil fuels, to replace them with other sources of energy. So in a sense, we have been able to set up funds of this sort. The market in our country is not all that dynamic yet when it comes to interest in these resources, but we have a very good foundation which we can later leverage. These funds will enable us to channel more resources. So we have taken steps to at least have a foundation that enables us to deal with the situations which will arise in the context of climate change. But we think that we need to do much more so that we can channel the required resources in order to be able to adequately mitigate climate change related problems.
Yeah.
Thank you very much. Climate change is clearly a key topic for all of humankind, for the whole world, and the corresponding discussion for countries like Colombia. We have to implement policies in terms of our energy matrix. We have a very clean matrix, basically, because it is based on dams, hydropower, but also we're making progress in terms of wind and solar energy. And so that's an important approach, but especially important for Colombia is protection of our forests. A large part of Colombia is covered by the Amazon forest, and that is shared with Brazil. And protecting that forest, that jungle, means tremendous challenges. Now, what can the central bank do in that context? Not all that much. This has more to do with government policy, policies of international support to deal with those major challenges. And what do we see from the standpoint of the central bank? We have a rather marginal role in terms of we try to be clean, non-polluting. We, this year, are working towards getting certification as a zero carbon emitter. But beyond that, the most important role, and here I think that we are at the same position as Chile is we as a central bank do a lot of research, and that research function is absolutely essential. And in addition to the general situation of climate change, we can look at the impact of the financial sector by doing climate stress testing related to the impact on climate change. Very interesting what you're saying about knowledge and research. Yesterday, that talk from the Harvard professor, he was talking about interest rates, saying that there are longer-term real interest rates and that would continue for a long time, and that one of the drivers, according to him, was climate change, talking about the demand in countries to address that demand for greater spending to address those challenges. Now, I have a question that was asked yesterday by Eric, our chief economist, when he was asking this to the panel of finance ministers. And as you were saying, the central banks in Latin America were more aggressive in raising interest rates than in advanced economies. And that because they were looking at the potential impact on the growth of their economies and impact on other economic activities. So I wanted to ask you, what do you see in your countries, that potential tension that exists between monetary fiscal policy and the reaction of politicians in your countries, saying basically that's enough? We see that in periods of monetary adjustment. So what has your experience been in your countries? And also the interaction between fiscal policy, is that really fulfilling its mission? So again, President González, well, thank you. I would say that so far, so good. We have made certain that the monetary board meetings, no matter how long they take, reach a decision made unanimously. So that's important in terms of the different sectors. And we as technical people, and two of my colleagues are here, they have been very good at projecting how inflation has been behaving. So we had inflation early on. Inflation continued to move upward, but then there was a drop, a significant drop of almost 121% now in March. And that strengthened confidence in the bank. And also, we can think of the expectation channel. It was efficient, it played its role, and it produced a second round effect. So again, I think that we can continue to follow the line that was projected this is an election year, so that makes things more complex because of the gradual way in which we have been increasing the rate. But all of that in keeping with projected growth, and things have gone quite well. So if nothing out of the normal happens, if the war doesn't worsen, if nothing else happens that could create a supply or demand shock in addition to what we have already foreseen, if nothing of that nature happens, I think we're doing well. Now, this month, we may need another small adjustment. That would be more costly because when people see that inflation is coming down, people say, okay, why are you still raising the rate? But we don't want to have the same experience that the United States had when they said, okay, you raised the rate by 125, but that proves to not be enough. So no longer is it one more adjustment, it's two or three more. So it is hard to get the rate to come back down. But if nothing out of the ordinary happens, I would say that in the case of Guatemala, we will continue in keeping with our projections. We don't see any major problems on the horizon. Thank you. President Garcia, thank you, Marta. Well, what I'm going to say is that in Chile, an important component of the inflationary problem was due to an excess in demand and in spending. So to address that component of the inflationary problem, we need a macro policy that aims at a certain austerity, promoting savings, disincentives for consumption, and with a fiscal adjustment, which is what we did last year. So in that context, my impression is that there is a questioning of the overall diagnosis of the macro economy. So in closing the rate hike cycle from last year, that helped the monetary board in looking forward. And there is a vision where we have to keep macroeconomics stable to deal with inflation. Now, when we have gone to Congress, there we talk about monetary policy. When the Ministry of Finance foresees things, there's a general vision that, for example, this year, the growth was close to zero. We have projected something a bit better than the adjustment foreseen by the Ministry of Finance. And after 2021, where, as Leonardo was saying, we had growth at 12%. But if you leave out mining, the economy grew at more than 3%. So over the years, the levels of production and spending have gone up. And that means that we have to moderate these imbalances. That is the way for us to get back to target. Thank you. President Rojas, thank you. As I said early on in my remarks, in Bolivia, inflationary expectations, fortunately, they're anchored. And that is thanks to the deployment of monetary and fiscal policy over recent years. We have encouraged the use of national currency. We call it the Bolivianization of currency use. And this has become a tool that makes it possible to isolate the country from different external shocks. Our monetary policy has been constant and sent clear signals in terms of economic activity. And all of this goes along with the deployment of policies that are well targeted. That has to do with the presence of the state in the economy. And the idea is to encourage investment. So these are the elements that central banks use in terms of economic performance. And with the constitutional mandate in my country in terms of coordinating with the fiscal authorities, I consider that we have accomplished major successes. We have seen a good recovery of the economy in the last 2 years, and we also monitor the performance of the economy. It's been favorable, and our inflation targets are close to 3%. In the first quarter of this year, we saw that we're at 2.5%. That's the 12-month figure. And we get the impression that we will meet target. Now, growth is sustained, that in the most recent period, and it's close to 4%. That last year and this year. So we hope to be able to reach our target, which is more or less around 4.9%. And then that goes along with improvements in the fiscal arena in terms of tax revenue, improving the efficiency of public spending, especially having a fiscal arrangement with a moderate deficit, always with a downward slant, especially in terms of the pandemic and in the year when we had a coup. So the outlook is favorable in terms of Bolivia's economy, and we hope that at the end of the fiscal year, we will be able to meet the targets that we set as part of the financial and monetary programs. Thank you. And lastly, President Villar. The projection for growth that we have for this year in the central bank is a low rate, less than 1%, 0.8% to be exact. That is our projection that we're using. And of course, there are sectors that are concerned about such a low level of growth, but the general message is that it is relatively acceptable after growing at such high rates that we had in 2021, 2022, where the second year was at 7.5%. And so it was absolutely impossible to continue to grow at that rate. And what we're doing is maintaining activity levels, very high levels of economic activity, higher than what we would have projected before the pandemic for 2023, had we continued to grow at the pace that we had pre-pandemic. So I think that the message is clear. It is important to maintain sustained growth in the medium term by eliminating the dislocations that have led us to have a very strong growth in demand and the imbalances that, if not corrected, could lead us to the inability to grow in the short term. So I think that in the middle of the normal discussion of this type of thing, there has been political support. The idea is to bring down growth, at least temporarily, so as to recover stronger growth in the near future. Thank you very much. Thank you, President Villar, and that brings us to the end of this conversation amongst leaders of central banks. So thank you very much for your participation. Now I would call for a round of applause to thank you for your participation.
We invite you to